Okay, so let's go ahead and let's start this slideshow. And it'll flip weird. And then we flip it back. Okay, so we'll be talking about federal income tax. Ooh, this one drives me nuts. And there's only one reason, is because when Trump was the first time he was in office, he changed the way we calculate federal income tax. I was absolutely perfect with the old way. But then he changed it all up. And I wasn't doing accounting anymore in payroll. And so I never really learned it. And I just, yeah, I just didn't learn it. But I'll tell you a story. So when I was moving from WACOG to here, it was, I needed to be paid out on my vacation leave. So I knew how many hours I had. I knew what my hourly rate was. And so I calculated how much I would be paid. And I had to calculate how much federal income tax would be withheld. I will tell you, I was down to the cents. Just almost spot on perfect with what I calculated for my final paycheck, my take-home pay. That's how good I was with understanding federal income tax. And now let's go learn a new topic. So we're going to look at the W-4. We're going to compute the amount of federal income tax to be withheld using the appropriate tables for manual systems with forms W-4 from 2020 or later, the percentage method, the wage bracket method, alternative methods such as quarterly averaging and annualization of wages, and part year employment, and withholding of federal income taxes on supplementary wage payments. And then we'll talk about the Form W-2. Have you done your taxes yet? I have. I turned my taxes in about 10 days ago. As soon as I possibly could. It was right after January 31st, which is when they have to have your W-2s back out to you. And I filed my taxes because I want my money back. Because, I'm going to be singing that Rihanna song, Pay Me What You Owe Me. Got my state refund. I haven't got my federal refund yet. But I'm waiting. It should be here. They usually take about 3 weeks to get out to us. So here we go. We've got two more objectives. Identify major types of information returns, discuss the impact of state and local income taxes on payroll accounting. You've got to get them done. You've got to pay them. Do not assume that you can play cash flow with anything withheld from your employee's check. Okay, supplement. Explain the purpose and use of W-4 from 2019 and earlier. Oh, those were the days. Compute the amount of federal income tax to be withheld using the appropriate tables for manual systems with forms W-4 from 2019 or earlier. See, this is what I'm good at. I am excellent at that. Okay. So first, coverage under federal income tax withholding. Employer relationship must exist for federal income tax withholding laws to apply. I was talking to a fellow student, and I can't remember what class they were in, but they were talking to me about one of their friends and the 1099 they received. And I guess the employer decided to move from the employee-employer relationship, and they classified everybody as contract employees. No, it's not even employees, it's contractors. Be really careful with this, because just because you say it's something doesn't mean according to the law it is. Don't let employers take advantage of you, because if you accept the 1099, do not forget that on those wages, you need to pay 15 point, I believe it's 15 point, let's see, 7.65, 15.3, something like that, 15.4, whatever it is. You have to pay the entire FICA, Social Security, and FICA Medicare tax, okay? So I'm trying to think, 7.65, so 6.5 and 6.5 is 13, so 15.3. Okay, so, pay attention. Don't let anybody take advantage of you. Okay, statutory non-employees have no federal tax withheld. Those are direct sellers and qualified real estate agents. Okay, taxable wages and salaries, vacation allowances, supplemental payments, bonuses and commission, tips, cash awards, and taxable fringe benefits. So disabled workers' wages, withholding for wages paid after the year in which the worker became entitled to disability insurance. Drawing account advances. That has to do with salespeople. When the salespeople, they basically, some places will do this where you can draw the money from your sales commission out before you've earned the sales commission, and then you just pay it back with your sales commission. I don't know. I don't like those. To me, that's just too iffy, but that is something that could happen. Advance payments to salespersons against their commissions or unearned salaries for which they are to perform services, but for which they are not legally obligated to repay. Gift certificates considered cash equivalent and therefore taxable. Crazy, huh? I can't tell you how many times I've got a gift certificate or something special. Now, but of course, all the things that I've got have actually been like $20 or something like that. It was a long time ago, and I never really paid much attention to it. None of us really do. That's the thing about it, is a lot of us don't realize exactly what totally is taxable. I know at one point the IRS was going to go after persons that were given cell phones by their company, and they were going to try to tax the cost of all the personal calls to the employee. But they realized it would be way too difficult, and so they nipped that in the bud. Meals and lodging unless furnished for the employer's convenience and or on the employer's premises. Okay, you can see the rest of that. It's kind of interesting. Moving expenses, non-qualified reimbursed employer paid expenses are subject to withholding. Partially exempt employment. If the employee spends half or more time in a pay period performing services subject to employment taxes. Payments to non-resident aliens subject to withholding. Scholarship, cash or reduced tuition is taxable if paid for teaching, research, or other services as a condition of receiving the scholarship. Sick pay, subject to withholding. Okay, yeah, that's just normal. Supplemental unemployment, so your unemployment is taxable. Travel and business expenses, non-accountable plans, if the employee is not required to or does not substantiate expenses with receipts. The employee receives travel advances and does not or is not required to return any unused amount of advance. Never heard of that happening where I've worked, but okay. Okay. Fringe benefits subject to income tax withholding unless specifically excluded. Equals fair market value of the benefits minus payment made by the employee. Fringe benefits that are non-taxable include services provided at no additional cost, qualified employee discounts, use of on-premises athletic facilities, reduced tuition for education, working condition fringes. Complete list is in Circular E, Employer's Tax Guide. So that's kind of interesting. Qualified employee discounts. I'd like to see more about that. Because, think about, you work at a shop and they give you like I know some of these name brand shops, you get a very good discount. And it's taxable? Interesting. Okay, how to withhold federal income tax on fringe benefits. Value fringe benefits and withhold tax at supplemental wage rate of a flat 22%, or fringe benefits and add to regular wages, treat as one paycheck and withhold on total. Flexible reporting of fringe benefits, option of treating benefits as being paid on one or more dates in the same calendar year. Can add 2,000 value of country club membership or add 500 to 4 paychecks. Then calculate withholding accordingly. Okay. Tips. Oh, that one is a pain in the booty. So, you have to come up with a very good method for tracking tips. That's all there is to it. You've got to come up with that. Because not only do you withhold federal income taxes on those tips, but you do it on whatever wages that you pay for them. Let's say that they have the minimum wage, they work 20 hours. You're going to withhold it there as well. Employer collects income tax and social security taxes on the reported tips. In food and beverage establishments with more than 10 employees, employer must allocate tips. Employer is not required to withhold taxes on allocated tips, only reported tips. Tip allocation can be done using one of three methods: hours worked, gross receipts, good faith agreement. Traveling expenses. Reimbursement travel expense to an employee paid under an accountable plan is not subject to income tax withholding. Accountable plan is an approved plan that must meet 3 IRS sanctioned rules. There is no plan in place. Travel reimbursements are made under a non-accountable plan and considered wages. Therefore, employer must withhold income tax. Law excludes certain payments and payments to certain individuals from federal income tax. So they want figure 4.2 on the next slide, comprehensive list of these exempt payments for travel and other business expenses reasonably expected to be incurred, accident and health insurance payments, deceased person's wages, dependent care assistance, domestic service, educational assistance. Okay. If education maintains or improves employees' skills required by the job for the non-job related educational assistance, up to $5,250 per year of tax-exempt student loan repayment contributions or tuition assistance for undergraduate and graduation is tax-free. Also applies to downsized employees and can be used after voluntary or involuntary termination. Okay, employee business expense reimbursements. Okay. Employee safety and length of service awards. If merchandise costs $400 or less, rises to $1,600 for a written non-discriminatory plan. Employer provided parking up to $315. Man, they really are going for this, aren't they? They're going to try to get every single cent. Foreign service, you got to be careful. You know what I'm going to tell you? Be really careful. You might want to have a CPA do your taxes. Group term life insurance, I get more than 50,000 in group term life. I can't remember what our life insurance does. I think it's 3 times our contract. Anyhow, I have to pay taxes on whatever's above 50,000. Health reimbursements, arrangements. Individuals for delivery, distribution, repayment, okay. Long-term care insurance premiums. These ones are very, very tricky. When I was at a church here in town, I was on the budget committee, and the minister, the preacher, he got 2 parts to his wages. He got housing, and then he got his wages. And what they did was they had a gross amount, and then it was up to the preacher to determine how much of that was wages and how much of that was housing. You're not taxed on the housing. So I never liked that. I thought that was really sneaky. But, hey, that's part of being in the church, I guess. Theoretically, they shouldn't be paid super well. I mean, typically that's what you assume, but they were. Okay, moving expense reimbursements, no longer exempt except for active military, public officials for fees only, not salaries. Here we go. None of this applies to me. Yay. Sickness or injury, transportation, a commuter, highway, vehicle, and transit passed, up to $315 per month. Wow, that was kind of fun, huh? Cafeteria plans. Must be the following benefits: accident and health insurance, self-insured medical reimbursement plan, group term life insurance, dependent care assistance, and health savings account. I have a health savings account because I have a high deductible insurance plan. Okay, pre-tax salary reductions are exempt from FIT. Employee can choose between cash pay or qualified non-taxable benefits. That's cafeteria plan. Flexible spending accounts. Actually, I don't like the flexible spending accounts because you have to spend it all. If you don't, you lose it. That's why I do like the health savings account, because I have deposits made and I pay for all my co-pays and my insurance, my prescriptions out of that. Whatever I don't use can carry over from year to year, and they take whatever I'm not going to be using and they invest it into an okay interest. money market plan, health savings account. Okay. I am there, except I think it's higher than that. I want to say it's higher than that. I gotta think about this in my head. Now I'm gonna do something on my phone because I know how much I have withheld every paycheck. And my company is really good about making sure. I think that's wrong. Something doesn't look right on that. So I'm gonna double check. Yeah, I have a whole lot more withheld. So I think those numbers are not quite true. Okay. Okay, here we go. I'm more in here. High deductible insurance plan. So I'm going to have so my health savings account, because I know I'm at the max, and it's about $2,000 more than the family coverage. And it's for me and my family. Okay, IRAs. Okay, pay attention to these. 7,000 is pre-tax. You can have additional makeups if you're age 50 or older. That's me. Roth IRAs are used for non-deductible contributions. So Maria's employer currently provides her with meals at the office premises as a condition of employment. The employer is planning to change the conditions relating to meals and lodging. The employer is considering the following two options: to provide cash allowances for meals and lodging, or to provide 60% of the meals on the employer's premises for the convenience of the employer. How many meals currently provided at the office premises are taxable to Maria? What is the impact of cash allowances for meals and lodging on Maria's taxable amount? How will the 60% of the meals provided impact the taxable payments of Maria and other employees? Well, the meals and lodging furnished for employer's convenience and on the employer's premises. Hence, the meals currently provided are excluded from taxable payments. Okay. Cash allowance for meals and lodging are taxable. Hence, if Maria's employer provides cash allowances, she should report the amount on her allowance on her W-2. If more than half the meals provided to employees on the employer's premises are for the convenience of the employer, then these meals are treated for the employer's convenience. So there we go. Interesting. Withholding allowances. Okay, so this is best for employees if withholding equals tax liability. They have this wonderful thing, and I'm going to see if I can find it here. IRS.gov. They have right here. You can come in here, never, ever, ever, as an accountant, tell people what they should have for their withholding, okay? You make them determine that themselves, how much withholding they should have. And this is the best way to do it. Have them go through this and they can figure it out themselves. If you help somebody and then it turns out it's wrong, theoretically, they can sue you for libel, okay? Because you told them the wrong information. They relied on the information. You are more the professional than they are, and they can try to get you to pay whatever it is they didn't have, whatever withholding they didn't have enough of. So be very, very careful. That's why I pulled that up. Okay. Current slide. Swap. Okay. Steps 1 through 4 are used to make adjustments to withholding. Okay. Always go look for the new forms. Employer must retain W-4 as long as it's in effect for 4 years thereafter. I never threw any of mine out. I was teasing one of my students. I've been working since I was 15. And so I filed taxes since I was 15 years old. I have 40 years worth of taxes. And I have told my husband, I probably should put it in my will, that all of my taxes are to be given whenever I die, to be put in with me to be cremated, because the two things you cannot escape is death and taxes. And so when I finally do escape, I'll take it all with me. Okay, you can laugh. Okay, so completing W-4, choose single or married filing separately or married filing jointly, or had a household box. When will an employee be treated as if the employee had checked the first option listed above? When the government comes in and they send you a notice saying that you have to have the withholding at that point. A new employee who is first paid wages in 2025 and fails to furnish W-4 will be treated as if they checked box for single or married filing separate and made no entries in step 2, 3, or 4 of the current form W-4. Note if the status of the employee changes with respect to marital status, number of jobs, dependents, the employee needs to file an amended W-4. So since I'm already here, let's go ahead and play. At least I think I'm going to. There we go. So I'm already here. So let's go forms and instructions, form W-4. So let's look at that. See, this one really kind of bothers me because it's like you've got, I mean, it used to be so simple. You just do the exemptions, everything was calculated so easily. But here is the form W-4, and you can see everything in here. And so what they want you to do, are you single or married filing separate, a married filing joint, or head of household? My husband called me up and he said, Chris, I need you to help me do this. My husband's 7 years older than me, so you can figure out how old he is. And I said, I don't know, just pick what you want. So he did. Okay, complete the step if you hold more than one job at a time, are married filing jointly, and your spouse also works. The correct amount of withholding depends on income earned from all these jobs. Do only one of the following. Use the estimator at WW for the most accurate withholding for this step and steps 3 through 4. If you and your spouse have employment income, use this option or use multiple jobs worksheet on page 3. Right there. I don't know how you would do this. Multiply the number of other dependents by 500. So that would, that would be your kids. Or if you're taking care of your parents. Okay. Add the amounts. Okay. Other income not from jobs. Then you have deductions. If you expect to claim deductions from the standard deduction and want to reduce your withholding, you can do the deductions worksheet on page 3. Here you go. Enter an estimate of your 2025 from Schedule A. So state up to 10,000 for state and local taxes, medical expenses in excess of 7.5% of your income. So let's say that your income is $100,000. So 10% of that is going to be 10,000. So let's go 7,500. Okay. You have to have medical expenses above 7.5% of your income. Okay. So that means you cannot claim any deduction until you're at 7,501. Okay. That one, you can start claiming. Anything above that 7,500, you can start claiming. And then you got all that right there. Enter if line 1 is greater than line 2, subtract line 2 from line 1 into the result there. See, this is just really estimate of student loan interest and certain other adjustments, and then add, and that's your form, whatever you're going to do for the form right there. Okay, right here. Extra withholding, you sign it and date it, and there we go. So lower paying job, annual taxable wage and salary. Higher paying job. So this is just, I don't even know what to say with this. This is not the form I'm used to it. But that's my problem, right? Okay. So let's learn how to do this. Okay. Employee can change the W-4. You have 30 days to update it. Employer may not prepay or reimburse the employee for income taxes. Nope. Employees can claim income tax exemption if they had no income tax liability last year and expect none this year. Exemption is valid for 1 year. Employees cannot claim income tax withholding exemption if they are dependent on somebody else's return and income exceeds $1,300. Additional and voluntary withholding agreements. Employee may request that the employer withhold an additional amount from the employee's pay. This happens when you get to the point where it's just you and your spouse or just you, and all your kids are gone and you have nothing else to claim, and you know you're going to be taxed. I think I've told you guys this a billion times before. Many, many moons ago, I I was a single mom. My husband was a single dad. We came together. So we filed head of household in 2004, both of us, to maximize our refund because I got paid back more than I actually had withheld. So then in 2000, no, that was 2005. In 2006, we got married. And so I got married on January 2nd because I figured in my head, if I'm going to get married, I'm not going to get married halfway through the year and then have to claim an entire year of married filing jointly. So it's just an accounting thing. So January 2nd was when I got married. So that year we had 5 children at that point. So he two in ours. And I'm going to tell you, all those child tax credits really added up. At one point, we always got refunds. We didn't have to worry. And then everybody started dropping off. First, it was our daughters. Then it was my oldest son. And then my last son a couple years ago. And so we have no more real deductions. And so now we're taxed a lot and we have to have a lot withheld from our paycheck. And I've known a number of people that reach such an income where they know that no matter what they put in their withholdings, it's not going to be enough to cover their tax liability. So they have extra withheld in order to not cover or not have to pay anything into the IRS at the end. Okay. Other situations, penalties imposed if you willfully and falsely file your Form W-4. If you do not, it's always been a law, but they just started enforcing it within the last 10 years. If you put on your W-4 and you under withhold by a certain percentage, the IRS can fine you for under withholding. If you work for the IRS and you under withhold, the IRS can terminate you. Just FYI. To avoid under withholding, non-resident aliens should not claim exemption from income tax withholding, request withholding as a single regardless of actual status, add an extra amount to wages and determine withholding based on the total amount. Write non-resident alien or NRA in step 4 on Form W-4. Federal income tax withholding on other income sources, withholding for pension or annuity payments. Withholding as if the recipients were single with no adjustments. Okay, right now I don't get any of those. Kind of bums me out because I have to wait till I'm 65. Okay, unless the employee chooses to have no withholdings or chooses a different amount for the withholding. Payment of sick pay by third party. Government payments such as Social Security benefits. The request is voluntary. You work as a tax consultant in a reputed advisory firm. One of your clients completed Form W-4 when he started working for his employer. The client is planning to get married and wants to file an amended W-4. He is keen on knowing the situations when an individual can file an amended W-4. He also wants to know how the employer will process it. So what do you say? You tell him, one, that they can file it when something changes. You have 30 days to make the changes. You do not have to repay anybody any taxes that they already had withheld. That's just not going to happen. If we didn't do it correctly, then we can go ahead and make changes. Okay. Employer calculation of federal income tax. So we can do the rate wage bracket, that's the easiest, or the percentage method, applicable to highly compensated individuals. Thank God for computerized accounting. Oftentimes, if you have a payroll segment added to your computerized accounting, they will update every year with the new tax brackets, okay? Because every single year, our federal income tax changes. And so they'll tweak some things and whatnot. And these programs will automatically update that. And then you don't even have to think. Okay, there are other methods rarely used for withholding. All these methods require data related to the filing status, how often they're paying, gross pay, and additional information from W-4. So Noni's annual salary is $40,144. She is paid biweekly, and her W-4 shows married filing jointly and no entries in step 2 through 4. What is her federal income tax withholding? So what we need to figure out is what is going to be your biweekly gross. It's 40,144 divided by 26. Use wage bracket tables, tax table B, to look up married filing joint, standard withholding, and biweekly. Her federal income tax is going to be $42. So, see, do we even see tax table B? Okay, I'm going to do something real fast. I'm going to see if I can find those. So I'm going to go back into the classroom. And we're over here. Let's go to the textbook. Because now I really want this. Okay, I don't want that. I want the textbook. I'll just go in here. I'm going to sneeze. Excuse me. Okay. I've been up and down this all day long today. So I'm surprised it's even. Okay, let's go e-textbook. Let's go find that text table A. I want to see exactly where they're talking. Okay, it's going to be back here on the back appendix. Tax tables. Okay, let's see which one. See, well, this isn't the one that I'm going to use. Okay, what was the one they were doing? Okay, tax table B, look up. That's tax table A. Where's tax table B? Here we go. Tax table. Oh, good Lord. Who can see this? I can't. Okay, so somewhere in here, we're supposed to be able to, let me see if I can try to increase this just a tad. Okay, so what was her wages? 1544. It's a weekly payroll. We don't want a weekly payroll. We want a bi-weekly. Here we go. 1544. So there we go. That's pretty darn easy, I think. You know what? It's not too bad. I think I'd rather do that one. Okay. Now we know where they got the $42. Here's example 2. John earns an annual salary of $124,400. His W-4 is married filing jointly with no entries and steps. What is his federal income tax withholding? He's paid bi-weekly. So what we need to do is divide that by 26. 124, what do I have down here? Okay. This is something I was working on. If somebody sees that, they know who they are. That I was double checking the information. It was actually somebody asked a payroll question. Okay. 124, 400. Okay, let's go 26. So let's see what they're. Okay. I got 478, 462. Find the range where 4784, whatever, over 470, but less than 22% of excess over 4750. So let's go find that. Again, I'm not even finding it. Okay, we're right here. Nope, still not there. Okay, here's the 2024. And actually, we're not even getting, we've got 3.8. So I'm assuming, I don't know why We don't have any additional, but it sounds like there might have been some additional. That's a biweekly. There's 2 pages. That's your weekly. Okay, I'm just going to trust them because it doesn't look like we have all the tables here. Okay. So we look at this, we know it's over 4,750. Okay. So what we do is we go find the 4,750. It looks like it was 4,750 is 417.4. Then we determine, okay, what's the difference? It's 3462. Multiply that by 22% and then add the two together. That's pretty easy. Okay. Belinda earns, I've got 10 minutes to get this done because I got to go teach class. Belinda earns a monthly salary of $3,000 and is paid biweekly. Her W-4 says single with no entries in steps 2 through 4. What is her federal income tax withholding? Annualized salary is 3,000 times 12, 36,000. Biweekly divided by 26, 1384.62. Is she paid? She's paid biweekly. Okay. We can use wage bracket and table to look up single, standard withholding, and biweekly. And so, of course, we're going to go do it. Okay. So there's married. Okay. Single is way over here. What was her amount? 138462. It's got to be right in here. We're going to go. That's a biweekly. She's paid biweekly. Okay, we looked it up. Why is the book telling us something different? This is where it should be. It should be $40. They're saying it's $40. I think they're looking at 2025 and we're looking at 2024. But it should be standard withholding is $90. Okay. Is that what I just said? Yeah. Okay. Never mind. Perfect. Spot on. Okay. I thought I was saying it was $40. I need glasses. Facts. Fairhart annual salary is 485,000. He's taxed on all of that. He's just and he's just making too much money. We need to go find him. And we need to, see if he'll give us some of that. He is paid semi-monthly. His W-4 says married filing jointly with no entries in steps 2 through 4. What is his federal income tax withholding? Semi-gross is 485 divided by 24 means he gets paid twice a month. We must use the percentage method in tax A, semi-monthly, married filing jointly, and standard withholding. The step is federal income tax equals a whole lot of money times the 32%. And why do we have the 20,000 minus 17? So let's go find out. Table A. Is this my table A? I gotta find table A. There we go, table A. Oh, okay. We're gonna go to semi-monthly. So this is our weekly. This is bi-weekly. We're looking for semi-month. Okay, married filing jointly. So this is what I have right here. Now this is the standard. Why do we have okay. Hang on, let's double check those wages. 2208. Wow. Okay. And then you go up to the next step. So 32598. You can see that right there. Okay. Then, so you got that 17. We got the 32598. Then we got to go the 17, the 2208.33 minus 17, blah, 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 and multiply that by the 32%, which is right here. Okay. So now you see it. Okay. Supplemental wage withholdings. We got vacation pay treated differently than other supplemental wages. Withhold as though if it were a regular payroll period. Supplemental wages paid with regular wages. Each type of wage is not indicated specifically. Then you, I hate when they do this because they end up treating everything the same, and I get taxed quite a bit. Okay. If you're going to do two checks, you can treat them separately. Okay, gross up. We're going to get grossed out. If an employer wants to give an employee the intended amount of supplemental check, the employer must gross up the supplemental amount. For example, an employer wants DOV, an employee to receive 700 net bonus. Okay, so then you've got to go in and you've got to figure out what all your tax rates are. So this is basically, I want them to end up with a net check of $700. So not only am I going to cover their health insurance tax rate, that's Medicare, this is Social Security, and this is my federal income tax. So I've got to figure out what my gross would be. And this is kind of almost like you're doing an entire sequential kind of method, okay? So what you're going to do is you're going to take that 700 and you're going to add all of that together. So the 0.22, the 0.062, the 0.0145, subtract, okay, go 1 minus whatever that result is. And then that result, you're going to divide into 700. And it's going to tell you what you need to pay, what your gross wages will be to make sure that you end up with a net check of $700. Okay. Sophie has an annual salary of $72,000. She is paid monthly, and her W-4 shows married, filing joint, no entries. Calculate her fit withholding by using the wage bracket method. Okay, what is she? She's married, filing joint. She is paid monthly. So let's go ahead. So first, I'm going to grab this. She's 72,000. It's like 6,000. There we go, 6,000. So she's paid $6,000 a month. So let's come back over here. Let's come back, move that back to what it needs to be. Okay, so 6,000 married filing jointly. We can come over here and let's find it. That's daily, that's weekly. So we're looking for monthly. Bi-weekly, month, nope, semi-monthly. So maybe it's going to be monthly is next. There we go. So we're going to find that 6,000. It's way over here. Oh, nuts. Nope, no good. It kept going. Thank God. Okay, so it's in between here. Standard withholding is only 388. Yeah, I don't think so. Okay, let's see what the book is going to tell us. Yeah, 388. It doesn't sound like I have more than that with help from my check. Okay, what do I know? Now I'm going to go look and see how much I get paid monthly. No, because you know what? That probably would be about right because, like if she's paid, let's look at that. It bothers me sometimes when I see these numbers. Let's take that 72,000. Let's go this divided by 26. Okay, I can believe it. 388. I'm good with that. Okay. Okay, I'm going to go ahead. I'm going to stop here. I'm on page 41. I'm going to go ahead and let this go, and I'll finish this up as soon as I'm done with class tonight.